If you are looking to learn how to make money on the stock market, simple, free, and easy, you are in the right spot. Bitmine Immersion Technologies is a $39 stock and is currently up 9% in a single day. Usually in 1 year, the whole stock market moves 10%, but this one is up 9% in a day. Now, the reason that that's happening is because what it's based on. This is based on the cryptocurrency Ethereum, which is up 5% today. So we learned something already if you really think deeply about it. If Ethereum is going to move up 5%, Bitmine Immersion is likely to move up 10% or double, but the opposite is true as well. If Ethereum falls 5%, then Bitmine Immersion is likely to fall 10%. So you gotta know what you're doing when you're trading these things, which we do. Early this month, we were buying it at a regular interval right before this pop, and then we turned it off, and then we waited, and this is exactly what happened. My dog just said, Keenan, you alerted on December 1st for BMNR, and I'm already up over $614 on a position. Thanks, Keenan. And I want to say, family, we knocking it out the park. Get in with the winning team. Webull, we got into a $10 put, and this was a little bit back, but now we got out up 21% on this one. We are the most consistent traders in the market, and I'm looking forward to helping you to learn the game. If you want to get on the trades with us and get my buy alerts, the link is going to be in the top of the description. I highly encourage you to join now so you can start the New Year's off right with the team. We just got off the live trade. Knocked it out of the park as we always do, where you learn or you earn. If you want to learn how to buy calls, buy puts, do options, trade crypto, I'm teaching all of it, family. The link is in the top of the description. Now, Bitmine, what's going on with them? Wall Street is saying that they just recently confirmed back to bullish, and they're saying that it could run another good percentage up because Ethereum is starting to push up. Let's look at some of the reasons why. Now, I've been looking at this one, and what they tell you on Wall Street is make sure you understand the fundamentals of a company, but let's make that even simpler. Think about it like this. You have assets on one side, you have liabilities on the other side. An asset is something that's bringing in money for the company. A liability is like your debt, like your credit card, like your loans. If you look at the ratio of assets to liabilities, their ratio for Bitmine is literally 1.16%. Family, if it was 30%, that would have been acceptable. If it was 40%, that would have been acceptable. But the debt on this company is so low that it's only 1.1% compared to the assets. Family, you love to see it. Let's give you a comparison. There's another company called MicroStrategy, and they're now called Strategy, ticker symbol MSTR, and their assets to liabilities is at 21%. This is the one that moves based on how Bitcoin moves. And you can see that just comparing MicroStrategy with a 21% ratio of debt to Bitmine with a 1% ratio of debt, it looks like Bitmine basically carries no debt. And they said just Bitmine has reported that it has 13.2 billion in holdings of Ethereum, and they're working on being a treasury for Ethereum even after Ethereum cryptocurrency slowed down in November. This is what's interesting about that. They're a $15 billion company, and basically all of that is housed in their holdings of Ethereum. But I often tell you, you trade with the chart and not with your heart. What does that mean? Let's scroll over to the charts right here where you'll see green candles and red candles, but you're looking for support levels. There's a support level, meaning it usually comes down here and it bounces back up, of about $32. Remember, this is a $39 stock. If it falls under 32, that's when you're in the red danger zone. But if it stays above 32, we essentially in the clear. And the point in which people can load up on this, smart investors, is going to be somewhere between the $36 and $32 range. For it to come down, just retest this a little bit and then go back up. But also that $36 mark is also a line called the 200 EMA, but this isn't on the daily time frame. This is on a 4-hour time frame because we're using the charts. We had to zoom in ever so slightly to get the details on it. I want to put you up on some more game. So the entry for this one is about 32 to about 36. The lower you get in, the better. Even if it tapped into like the $30 level, but it didn't stay down there, then that's the entry point. However, the target for it to go up to retest, you need two things to happen. The first thing is you need Ethereum to keep steadily moving. And then what's going to happen with that is we are likely to see BMNR move up towards your $45 mark. And a lot of smart investors who are listening to the levels, who understand how to use a stop loss. If you don't understand how to use a stop loss, write the word stop right in the comments so I know who I need to speak to. And then what I want you to do is book a call with my team so I could teach you how to do these things nice and easy. And then the next banger on the list is Lyft, ticker symbol LYFT. Lyft is a $21 stock. It's down 3% today. What is going on with them is we're seeing the impact of something that they had did before. They had tried to expand into Europe through buying a company called Free Now. And now we're starting to see that that expansion is actually working out. This is how it's working. What you want to do is look at the revenue. The revenue is all of the money that a company is bringing in. Every time somebody take a Lyft ride, it's adding to the revenue number. In 2025, at the beginning of the year, they made $1.46 billion. But the beginning of 2026, they're going to make $1.6 billion. What does this mean? That after one whole year, they made it so the revenue, the floor, the lowest points are getting higher. This is a sign of a company that's headed in the right direction. But here's the thing with Lyft that people don't often tell you. You know how I just showed you that Bitmine has a 1% ratio compared to their debt? They got all of these assets. It's like, imagine this. If you had $100,000 in your bank account and then you had $1,000 in credit card debt, you could easily pay that off. Or if you were like MicroStrategy and you had $100,000 in your bank account, but then you had $21,000 in credit card debt, you could pay that off pretty easy too. But here's the thing with Lyft. It's as if Lyft has $100,000 in their bank account, but they got $90,000 of credit card debt. That's not the worst. They could still pay it off, but it's not as good as the other situations. So then this makes Wall Street kind of look at them like it's kind of cutting it close, right? So then that's why Lyft gets that volatility. Volatility meaning it go up sometimes, it come down sometimes, and it could get a little bit hazy on the market if you don't know what you're doing. But I want to show you the institutions who are tracking this very closely. We're going to look at price targets that just came out. And we got two price targets from two institutions. One is Wells Fargo, the other one is another institution. And they both said that this is going to $26. And they're saying this is going to happen within now and 12 months from now. So what we're looking to do is to potentially play a call option on this one and ride the wave even partially up to that and magnify the gains. So we refer back to the charts to make it make sense. Let's first look at the level of support on the 4-hour time frame. There's a huge level with 3 to 4 different touch points on this blue line on the bottom at about $18. What is this telling us? If we come back down to $18, then we know 18, 19, and even 17, this is the spot where a lot of smart investors are going to be buying into call options to play this back up towards the $20 range. The first level that would have to break for us to see that would be about $21.50. We would need it to close out and be under that for like a day or two so we can see it coming back into the teens. But as long as it's staying above that, then this right now at this very point at the 21 level is our entry point to potentially play it back up to about $23. We just have to see what happens. Make sure you subscribe to the channel so when I'm sending out the alerts here, you can know what we're doing. But on KGU, I'll be able to send them to you significantly faster. And check this, Lyft has been coming down all day. So how are we gonna interact with this? There's two ways to go about it. If you wanted to get into a call option right now to try to play it to 23, I'm gonna show you how to do it. However, the better play is waiting for it to come back into the teens, your 17, 18, 19, and then playing it back up. But this is how you do it. So if you go to the Robinhood app, we use this as an example, but it works on any of these apps. Robinhood, Webull, Public, Moomoo, Fidelity, all of them. Just think about the steps, but we'll use Robinhood as an example because I know many people have that app. Let me know what app you trade options on so that I know when I'm doing things like this to consider the apps that you are on. So write that in the chat for me. If you're on Robinhood, you go to Lyft, ticker symbol LYFT, and at the bottom, we're gonna tap the word trade. Once we tap the word trade, we're gonna tap options, and then we're gonna scroll to January 15th, 2027, where it says buy, call, and then this is the $20 strike price. Currently, it costs $670. So if you get in right now, it looks like it costs $6.70, but you will really have to pay $670 for the one contract. But if this comes back down to the 17s, the 18s, and 19s, because you're patient, it will be significantly cheaper to get into the same exact contract to ride the wave back up. And then last but not least, I want to put you up on game on a stock. that I want you to pay attention to that's looking undervalued, and they got their earnings coming out soon. Adobe, ticker symbol ADBE, is $344 right now. But the forward price to earnings is actually extremely low. And even the current price to earnings, which is a ratio on the market, that tells you if you're looking at a tech stock and it's under 30, oftentimes they are undervalued. This one is at 21, so we want to keep our eye on it. Throw that one on your watch list, family. Hit the subscribe, hit the like. I'm looking forward to seeing you in the next video so that we can break all of these things down and make some money right here for free on YouTube, family. But for the rest of you who want some more hands-on help, the link is in the top of the description so you can get my trade alerts. I'll see you in the next one. Let's keep it going and take care.